Well, it is all about earnings, so let's get cracking with Greenlam Industries. A decent quarter for them as the margins improve on lower input costs. Revenues too came in high by 14% in the quarter gone by. Saurabh Mittal, who's the MD and CEO at the company, now joining us to tell us more. Saurabh, a bunch of questions. First half your revenue growth was around 25%. You have said in the past that this year it'll be 20 to 25% sort of top line growth. So you're on target for that. Just wanted to understand that one, for FY23, is that on board? And secondly, more importantly, FY24, what's your revenue growth target for that one? Because you will have some more capacity come on stream as well.
That's right. So FY23, I think we should be in that band of 20-25% revenue growth. By FY24, we'll have new capacities of plywood coming in production by Q4 of this financial year. That's available for us in FY24. We have the Naidupeta plant in Andhra Pradesh, where the laminates factory will start by Q4. So we'll have that capacity available for us. And the Gujarat facility, where we are upgrading the facility, the expanded capacity will also come to us in Q4. So if you look at FY24, besides the existing manufacturing facilities and products, we'll have addition of the Gujarat's full capacity available to us, Naidupeta's laminate capacity available to us, and ply capacity available to us. So it will depend on how much we can utilize the capacities in FY24. But clearly, I think as far as revenue growth is concerned, it'll be a reasonably good growth on the top line side in FY24 too.
Can you do two back-to-back years of 20% at least? You explained us the capacity is 20%, 20-25% should be par for the course in FY24?
So with the capacities we are putting in, and in FY24, the particle board capacity will come in stream by Q4 FY24. So if you look at next 2-3 years, so with the capacities you're putting in, I think something like a 20% plus minus is clearly doable and possible.
Right. I say this because the last time you joined us, you said that the entire capex that you're doing will cost you around 950 odd crores, and it can result in revenue addition of close to 15 to 1600 odd crores over the next 3 to 4 years when all these capacities go on full stream. So to that extent, just wanted to understand how much of that will accrue in FY24, 25, and margins. I mean, are we likely to see them improve because chemical prices have come down?
Sure. So on the capacity, since we spoke last, I think the Gujarat factory which we bought, has got added to that number. So that will also add about 200 odd crores of potential, 225 crores of revenue potential. So in total, with the investments in Andhra Pradesh, Tamil Nadu, and Gujarat facility, we can add approximately 1700 to 1800 crores of revenue on full potential, which I think will happen over FY20, some in FY23, FY24, 25 and 26. I think that'll be more like so over the next 3 financial years, and if you add this year over 4 financial years, all these facilities will come into meaningful capacity utilization, and all the revenue should come to the balance sheet.
Okay, let's focus on profitability then. We've gone on enough about the top line. Tell us about margins. Do you see scope for improvement from year on? Earlier you were talking about 11.5 to around 12%. So is it moving in that direction? And the veneer business, breaks even next year or in the coming couple of quarters?
So if you look at the margins on the laminates front, we are over 12% in Q2, and we've also had some challenges in certain export markets, which are in the emerging countries where there have been currency crisis in those countries. So despite having a good order backlog, we've not been able to ship to those markets. There's been some initial stabilization loss at the Gujarat plant which we bought. So on the margin front, I think with utilizations getting better and with certain raw material costs softening, we hope the margins will improve as we proceed. On the veneer business too, if you see Q2, overall the revenues grew well, about 25-30 odd % revenue growth was there. Q and Q and in your on a sequential basis. The challenges were a little bit on the RM cost. So we have taken some price hikes in the veneer and the flooring business. So there still is a small EBITDA loss, and we hope that we come to EBITDA profit at the soonest.
When?
Well, the endeavor is like immediately, So clearly, maybe next 2-3 quarters we should get there.
All right, we take that point. And working capital days, you've improved your working capital days by 8 days in the second quarter. What's your long-term target out there? Because at 69 days as well, despite the improvement, it is stretched.
Well, if you look at because we're in the decorative segment, so we have a large number of SKUs. Most of the raw materials are being imported. So if you were to dissect that between laminates and veneer, in the laminates business, Our working capital days is about 15% of sales, which is likely nearly about 45, 47 odd days. On the veneer side, because the revenues are lower, that's where the small challenge is on the working capital days. But I think we should keep improving this as we gain more revenue and more size and scale. In the new facilities, clearly the working capital days will be lower than the existing business model because most of the RM is local there, and sales are also going to be in the domestic market.
Final question then from my end, what about your retail presence? You said you've expanded it by launching an experience center in Ahmedabad, etc. How much of your revenue do you expect to come in from your own retail channels, and how much will you invest in increasing your retail presence?
Right. So we are not selling from these experience stores we're building. So they're really for an experience, for the influencers, for architects, IDs, homeowners, dealers sending in their contractors. So these are not revenue points, but they're demand generation points to support our channel partners and our influencers. And we're gradually ramping that up. Now we have 2 company-owned, company-operated centers, one in Calcutta and one in Ahmedabad. Besides that, we do a lot of retail displays, shop-in-shop displays with our channel partners.
Right, we get that. But quickly, if you could tell us, how much will you invest in these? Because these would be for branding.
So our marketing spend is, I can give you the marketing spend figure, not specifically for the experience centers at the moment.
All right, take that point. Thank you so much for joining in and giving us all those details. Wish you good luck for the remainder of this year. And with that, we are out of time of this edition of Chartbusters. That, ladies and gentlemen, was management of Greenlam. Thank you for watching.